Maluju Sports is such a boring question because there's really nothing much in the question. The only thing that I really like about the question, sort of, is the B part of the question. But for the rest of this, it's extremely, very easy and very boring. Okay, Maluju Sports sells soccer balls. The entity is a registered VAT vendor and all their suppliers are registered for VAT unless specifically stated otherwise. The entity makes use of the periodic inventory system when recording transactions, and they use the first in, first out method of inventory valuation. The entity makes use of allowance accounts should they settle if they are entitled on that, and on 1 May they had an opening balance of 20 balls with a total value of 5,000 rand. Good. The following transactions took place in the 4 months 1 May 2018 to 31 August 2018. And the first thing that you have to do is to prepare the journal entries for those transactions that took place. Now the first one, bought 25 soccer balls from Soccer Limited, an invoice amounting to 6828, the invoice amounting, so that includes VAT, after deducting a 5% trade discount was issued upon the delivery of the merchandise. So clearly always invoice value is after trade discount, but here they also tell you it's after the trade discount has been deducted. Freight charges amounting to 3749 were incurred, and an electronic transfer of money was done to settle the outstanding freight amount. So again, inclusive of that. Should Maluju settle the creditors account within 15 days of the purchase date, the settlement discount of 10% will be allowed. It is probable that the account will be settled within the settlement discount period, so therefore I have to create an allowance account. So let's quickly have a look at those purchase transactions of the 25 balls. General journal, blah, blah, blah. Purchases, 6828 important, it's a periodic system, so I cannot debit inventory. If you did debit inventory, you would not have received anything for this line item. Okay, and that would have been the amount exclusive of VAT, and then we are entitled on a 10% settlement discount. So only 90% of that amount would have been transferred to our purchases. The other 10% of the VAT exclusive amount would have been transferred to our allowance for settlement discount for creditors. And that is the 594. So purchases will be the VAT exclusive amount times 90%. Allowance for settlement discount will be the VAT exclusive amount times 10%. The full invoice amount, 6828, will be posted against our creditors account. And then the VAT input will be the 6828 divided by 1.15 multiplied by 15%, being 891. Then there was freight charges also involved. Total freight charges 3749. It is a periodic system, so those freight charges would have been posted against the individual freight charges expense account. VAT exclusive amount 3260. The VAT would have been claimed from the receiver in the VAT input account, and then bank would have been the credit amount amount that we have paid of 3749. That's the first transaction. The second transaction, we sold 15 balls at a market price. A market price means that is VAT's inclusive to Mrs. Coach on credit. A trade discount of 4% was granted. Now the market price is the price that we usually sell our stuff at. So if there was a trade discount of 4% granted, we still have to deduct it from the 6469. So here we sold the 15 balls. What the amount that the debtor is going to owe us is 6469, the normal price, multiplied by 96%. That gives us 6210. Sales 5,400. They don't tell you anything about settlement discounts or expected settlement discounts, so therefore the full VAT exclusive amount will go to sales, and the difference between the invoice amount and the sales amount will be your VAT output for the period. Next one. Here we purchased 15 soccer balls and paid 5520. If we've paid that amount, that will include VAT. an additional amount of 907 Rand was incurred to transport the cost to the premises. So that is the amount that we've paid or had to pay, so that is also a VAT inclusive amount. An electronic transfer of funds was made to settle both these amounts. So for that 15 balls, purchases once more, very important, will be the VAT exclusive amount, debit 4,800. VAT input will be the difference between the VAT exclusive amount and the VAT inclusive amount. And now please have a look that the freight charges is not posted to purchases. It's got its own account. Freight charges would be the VAT exclusive amount 789. We will claim the VAT on that invoice 180 Rand and eventually be paid 907 Rand. Then receive a direct deposit amounting to 8380 from Mr. Koch in respect of 25 soccer balls that we have sold or delivered to him on credit. Now, if we receive the amount and we have to journalize the entry, then the journal entry is all about the receipt. So therefore, it's not going to be sales or anything funny like that. It will be debit bank at credit debtors, because at the date that we've sold the balls, we would have created the sales transaction. Following consumables were on hand at 31 August 2018, so that will be my consumable stock. Stationery of 1075, VAT inclusive, so I have to take out the VAT, and packaging material of 1140, VAT exclusive, so that would be my consumable stores at the end of the period. Management decided on 31 August to abolish the periodic inventory system and to change to the perpetual inventory system. Suspicions exist that the inventory losses occur frequently as a result of theft. This change will be done retroactively from 1 May 2018. A physical stock count as of 31 August 2018 revealed that the soccer balls inventory on hand amounted to 6,300 Rand. Now remember, we have started off here with 20 balls and we had a total. And then we know exactly what transactions took place from that date to up to the end where we took the stock take of 6,300 Rand. So we will be able in this instance to calculate the theoretical inventory on hand as at the stock take. So what we then have to do is to see whether the theoretical inventory on hand, how does that compare to the physical stock on hand to determine whether there was losses or not. So the second part of the question says, calculate the inventory loss that Maluju incurred for the 4 months ended 31 August. Good. Now, we had opening inventory of 20 balls. Then we have purchased 25 balls, and what was the cost there? It was the 5344 plus it was the 3260. 5344 plus 3260, in total the total cost 8604 for that 25 balls. Then we have sold 15 balls. There it is. Then we have purchased again another 15 balls, and the cost there was 4,800 plus 789. 4,800 plus 789, in total 5,589. And then these 25 balls were done, let's assume in the same period, so that 25 balls were sold, so therefore I'm going to deduct the 25 balls. So if we're now going to add all these together, all the pluses and minuses, it means that we had closing inventory on hand of 20 soccer balls. We have to apply first in, first out. So if there are 20 soccer balls on hand, it means that that last purchase of 15 balls in totality is still on hand, and the cost involved there was 5,589. It also means then that was 15 balls, that there must be still another 5 balls that came out of the second last purchase. So that was the second last purchase. So 5 divided by 25 multiplied by 8604, that will give us then the total cost for those 5 balls of 1721. So the value of our closing inventory, theoretically speaking, is 7310. Our physical stock count only revealed that stock with a value of 6,300 Rand is actually on hand. So therefore, the difference between the two constitute the inventory loss that they have suffered of 1010. Last part of the question says, prepare the inventory note to the statement of financial position. The accounting policy note can be omitted. So if you go to the actual inventory, trading inventory is now not going to be reflected at the theoretical value, but at the actual value of physical stock on hand, which is 6,300 Rand. And then we have to add our consumable stock to that. And if you can remember correctly, our inventory stationery was 107 VAT inclusive, so we have to take out the VAT, and the packaging, which was 1140. So the VAT exclusive stationery 935, packaging 1140. So total consumables, the total of 2075.